New York. We're looking at what opportunities we have here going into our afternoon. Just a really quick recap here of what we had going into the morning. As we were going into our morning timeframes, into our pre-market timeframes, we had a gap fill statistic that showed us that there were edges leading us into the gap fill in a 76% probability over the last 180 days, 79% over the last 90 days, and 67% over the last 30 days on a Tuesday morning. We were inside of the 20 handle, which in price, there was a 69% probability for filling the gap from that 20 handle. And we also had a VIX support level that we were sitting right on top of as we were going into our overnight time frame. The combination of all of those factors here led us to an environment where the indices could fall into the direction of their gap fill from the top of this range. And we were hypothesizing that there would be nothing in the middle of the range, and then we'd have the potential of falling all the way back down into the bottom of this range, even retesting our previous lows of the week. Now, as we go into our afternoon, we're going to be discussing what setups here that lead us to the potential for that continuation of the trend, depending on if the VIX were to break through the rest of the way here through its highs of the week to lows of the week. And this is where the indices do have a variation of support that we're going to have to contemplate. And the first reason is that VIX resistance level, the all the way halfway back short from our highs of the week to lows of the week. The other thing that we've had a run in with is just a psychological level from the perspective of a 100 handle move. Our highs up here were the 7,027. Let's go down to the 15-minute time frame here. The 20 handle, this gray line that you see here, was the probability, that 69% probability of filling the gap from the downside here. But you'll notice that we have run 100 points, more than obviously now. Our 27 high is now the 10. And let's take a look here at 930's highs. That is the 17. And we've also run through the 17. So we've had a 100+ point move from Globex, and we've also had a 100-point move from the perspective of trading hours timeframes. Now, as we move forward, and with that context, we're going to talk a little bit about our leading indicators here going into the rest of the day. The dollar has a long setup. Now it is running into resistance, but it has a long setup from last week's lows to highs. And because of the positive correlation that we have with the indices, we were anticipating that this dollar weakness would help contribute to indice weakness. And that has been the case here today so far. The dollar's weakness continues into its full retracement long from lows. It's bullish above line in the sand, the 96,385. Moving on here to Bank. Bank is making its way into a pullback here from last week's lows to highs. This was also helping to contribute to the indices weakness. We're going to be trailing a short from our highs of the day to lows of the day that could lead us into a continuation of a weakness event. You'll notice that this is very similar. This could look very similar on the indices here, squeezing up into resistance before continuing a weakness trend as we're going into our afternoon. The VIX is stuck between two opposing setups. But what we're going to be watching for here as we go into our afternoon is, first of all, profit taking. And then we're going to be watching to see if the VIX defends another pullback. We had entries in the morning here off of the VIX's support level once, and then we started lifting off. We're going to watch for a... This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.